What's up, guys? Welcome back to Road to the 2 Comic Club. Justin here, and gonna do another update video for you guys. It's Friday, October 26th, almost midnight, but I want to give you an update on some Tesla action that happened today. Obviously, the market was not great today, but it didn't do as bad as it did a couple days ago, and I'm going to take full credit for that because I bought 3 put options today. And if you watch this channel, you know how my luck is with put options. As soon as I buy them, the markets start to turn around. So you're welcome for that. Because seriously, I swear, right after I bought them, stocks kind of started rebounding. And so yeah, I currently own 3 puts now in the QQQ just for protection. But again, probably I'm down on those right now. But anyways, this video is brought to you by Road to 2 Comic Club YouTube channel. If you guys are in the market for a comfortable t-shirt and want to support the channel, you know, pick up one of these shirts, or both if you want. This is the logo shirt that I designed and my friend printed for me because she used to have a t-shirt. She has a t-shirt printing business. She's really good at it. And this is me awkwardly repositioning myself on my chair. But this is the money sign shirt, and it has little Road to the 2 Comic Club logos inside of it. It's kind of what makes up the dollar sign. So it's a tri-blend shirt, super comfortable, polyester, rayon, and cotton. If you like those kind of soft, stretchy kind of material shirts, hit me up on Twitter at Road2Comic Club. It's in the description if you want to find it. Before I get into this video, I found this random article, so I just wanted to kind of show you guys because I think it's really beneficial. It says even a 10-minute walk may be good for the brain. I've been reading some self-help books lately, like over the past 5 or 6 months, and I did read a couple times that taking a 10-minute or like a 10 to 20-minute walking break obviously is good for exercise, but it is good for clearing your head and helping you refocus. Now, don't go for a walk and bring your phone and be on Facebook. The whole point is to clear your brain, clear your mind, clear your thoughts. So just walk, observe nature, look at trees, whatever. Just don't try to focus on anything in particular. It really does help. I've been doing that over the summer, and I just love doing that. I think you guys would too. Obviously, if you're in the United States, it's going to be harder with the stupid weather getting colder. But anyways, I just thought I would share that with you guys. So let's just talk about how the Dow did. So the Dow dropped 1.19%, the NASDAQ 2%. So not great at all for them, but it was doing a lot worse earlier today. So definitely excited how it rebounded at the end of the day. Kind of getting used to these swings at this point. And I was just thinking while I was driving today, like, you know what? Like, I would love if everyone would just calm down and be like, hey, maybe if we stop panic selling, maybe the stocks won't drop anymore. I think that would be a brilliant idea. And I think if we all stopped selling and just bought on dips, I think the stocks will go back up. But, it takes a lot of people to collectively do that. And it's easier said than done because no one likes to lose money. So it's really easy to panic sell. I've done it many times. But I just think if everyone just collectively calmed down and, just stopped selling everything and just started buying again, I think the market can kind of rebound, and the economy is still doing well. So I think that's going to happen. And we'll talk about, if you see that headline actually right below that huge Microsoft ad, we're going to get to that article that does talk about a rally that could happen. So let's keep going. Here is the chart for the Dow. I have the 200-day moving average line. You can see it's still trading below. But again, it's very, very early. It's way too early to say if we're in a bear market or not. So I don't think we're in a bear market at all. We're just in a correction kind of zone right now. But you can see that it's been trading well comfortably above this entire year. Only a couple times it touched it. And, I'm not going to sit here and claim that I can predict the future. I don't think anyone can, and they shouldn't claim that. So there's a lot of things that could snap us back into a bull market, but there's a lot of things that could not snap us into a bull market. So we got to just do our due diligence and just keep our eye on the news and see what happens and, make our trades accordingly. But yeah, I just wanted to show you guys that. So going to that article, this headline is called, and I'll link to this in the description if you want to read it, but I'll summarize it here for you. Stocks could rally 20% after this bruising rout, says Guggenheim's Minard. Sorry if I butchered his name. After that, watch out, though, he says. So basically what he's saying is he's predicting a 15 to 20% rally after all these because stocks are getting really cheap and the price to earning, the PE ratios are getting pretty attractive right now. However, he says at the end it could go down, and mainly because well, there's a lot of stuff, especially the uncertainty with China. That's a huge thing that could definitely, if that escalates and gets worse, we could definitely be in bad shape. But he was also talking about the Treasury note. He said if it gets as high as 5.5%, then definitely bull market, or bear market, sorry. But he said currently where it sits right now at 3%, probably not really affecting the stocks that much. But again, I'm actually happy that the 10-year note went down. I'm hoping it goes down a little bit more, because when the yield goes down for the 10-year Treasury note, it makes investing in stocks a lot more attractive, and that's good for stocks. So you kind of, if you're someone who invests in stocks, you're kind of rooting for the 10-year Treasury note not to go too high. So yeah, there's a little bit of information about that, and that about pretty much wraps it up for that. Oh, finally, to conclude, he thinks, in 2019, if the Fed continues to lift interest rates, by the second quarter of 2020, we can officially be in a bear market. So I'm hoping to ride the wave up until then, and then I will probably start definitely loading up on put options and just kind of parking my money in stocks, maybe even leaving some in just cash and kind of picking up shares as they fall. I think that would be like the prudent thing to do. And so yeah, I did get a comment in my last video about what my strategy is going forward. So that pretty much is it. I intend to ride this bull wave for the next year, and then I'm going to be playing much more defensive with my investments, buying a lot more put options, maybe learning how to do spreads, or I don't know. Like, I still haven't had time to learn how to do that, but I do want to get into that. But anyways, let's just keep moving. And here's Tesla. So I want to finish this video talking about my Tesla positions and update you on that. Tesla did have a good day today. You can see right here they closed $16 up per share, 5%. A great day considering almost everything else went down. So really happy. They are trading above their 200-day moving average. So that's good. Always good news when a stock goes above that. So let me just close that. And now I'm going to show you my current Tesla positions. So if you look here, you can see these like 4 gray boxes. 4 out of my 5 Tesla calls are in the money. So I'm probably going to be looking to sell those pretty soon and collecting some profits, especially these ones that expire in 2019 August. And then what I'm going to probably do with those profits is I might buy some new calls. Maybe one. I have 2 calls here. Let's say I sell these 2 calls. I might just buy one more call for a really long expiration date. Oop, I just knocked a folder off my desk. I want to get one like long-term call because they're much safer, and then I want to take some of that profits, and probably I'm thinking about putting in Visa stock. I was just talking to some people about that, and I was also hearing on TV a lot of people like Visa, especially with the rising interest rates. They think they could benefit a lot from that. And I did see a headline that people were funding their home renovations with their credit cards. So, I think Visa's not going to be in a bad shape they're not going to be in bad shape when the interest rates go up. So I am looking to maybe pick up a position in that. Although I do really like AT&T, and they did go down to $29 a share today. I just saw that from Lydia's live stream, so shout out to her. I wasn't paying attention to AT&T today. I was mostly looking at Tesla because they were the only one that was green. It was the only one keeping me happy and not depressed. So I wasn't paying attention to that, but they're really cheap right now. I might be looking to buy some more shares of that as well next week. So that is what my plan is for next week. Maybe selling a couple of these calls, picking up some more AT&T shares, or if I have enough money, some Visa shares. They're a little bit more expensive, but yeah. Now let's just conclude. Oh, actually, let me show you okay, on the 23rd, so earlier this week, I believe it was the day before Tesla reported earnings. I talked about this, how I bought 2 calls, and I actually used margin to buy these because I couldn't afford it with my regular cash, but I did pick them up at $4,900 I spent on the 2 calls, and I did sell them 2 days later, so the day after their earnings, I sold them, and had I held them on today, I would have made more money, but whatever, it's fine. I sold them for $7,400, made $2,400 profit, about 50%, just shy of that, but not bad for 2 days. I'm very happy with that trade. It's always nice when a trade actually goes in your favor, and you actually look like you know what you're doing. So I'm really happy with that. And let me give you an update on the current position. So you can see on the screen like the market value, but I'm going to just show you I already added it up for you guys. So right now, all these positions like the 41, 26, 38, 55, this is what I paid for the calls, and this is what they're worth right now in this column. So I paid about $29,581, and it's currently worth $4,800 at the current market value, $48,600. So right now we're at a $19,000 profit on these remaining calls, and so I'm really excited about that. I'm just hoping we can have a rebound like that guy said, and this can shoot up to 100%. You can actually see one of our calls is up over 100%. So really excited about that. And the other one is up 95%. So those are the current Tesla positions. You can kind of peek at some other ones if you want, but here's a QQQ puts that I bought, paid $23.96 for them, already down to $19.54. So again, I think every time I buy puts, the stocks go up. So I will definitely sacrifice my money to help everyone make money. So, I think in the long run, it's good. Okay, anyways, finally, let's just end at this current information, this current news that happened with Tesla. This is why their stock kind of dipped today, but then it came back up. So that was actually very relieving that it went back up. But the DOJ is investigating whether Tesla misled investors. This just kind of pisses me off to hear stuff like this about Model 3 production. Now, I personally don't believe Tesla or Elon Musk would just completely make up numbers to help their earnings calls. I think he was just excited how good their numbers were, and that's why he wanted to talk about it. I don't think he was just making up numbers. I mean, like anyone can make up numbers. I don't see why he would want to push it up just to tell a lie. It doesn't make any sense. Like if he's going to wait to tell a lie, he could have just waited till November to do that. Now, an interesting thing I read in here, someone on Twitter was talking about, let's see if I can find it. Yeah, so Elon Musk was saying that this is old information that the Wall Street Journal had or whatever. And he said, someone said, where is the SEC when the Wall Street Journal publishes old information purely meant to distort the stock and harm investors? I think that's a good point. I personally don't give really any credibility to Wall Street Journal. They take a lot of things out of context all the time for clickbait. And so I don't really take anything they say seriously, but I thought that was a good comment from someone. And yeah, he said, I would love for the SEC to ask the reporter why they publish this information at 2 p.m. Eastern Time. Eastern Time, that's about 2 hours before the market closes. So yeah, there you go. Anyways, here is what Tesla said to that. Earlier this year, Tesla received a voluntary request for documents from the Department of Justice about its public guidance for the Model 3 ramp, and we were cooperative in responding to it. We have not received a subpoena, a request for testimony, or any other formal process, and there have been no additional document requests about this from the Department of Justice for months. When we started the Model 3 production ramp, we were transparent how difficult it would be, openly explaining that we would only be able to go as fast as our least lucky or least successful supplier, and that we were entering production hell. You guys all heard Elon Musk say that. Ultimately, given difficulties that we did not foresee in the first of its kind production ramp, it took us 6 months longer than we expected to meet our 5,000 unit per week guidance. Tesla's philosophy has always been to set truthful targets, not sandbag targets that we could definitely exceed, and not unrealistic targets that we could never meet. While Tesla gets criticized when it is delayed in reaching a goal, it should not be forgotten that Tesla has achieved many goals that were doubted by most. We are enormously proud of our efforts of the whole company in making it through this difficult ramp and getting us to volume production. And I'm going to end with just giving my thoughts on this. Again, I think it's so stupid that they're bringing this up right now. For one, how can you even you can't predict the future. This is the first time Tesla's making a car like this. So how do you expect them to really come up? This is why Elon was really wanting to go private, because he has to make these stupid predictions to these people just to make them happy. These shareholders are not really, and mainly like short sellers or whatever, whoever is like hounding them for this. It's like, dude, they're just making this for the first time. Okay. You can't possibly know what's going to happen. Like you might think, okay, we're going to do 5,000 per week, but what if like something happens with the windshield wipers and now you're set back for another 2 weeks? Or what if, there's something wrong with the battery cells and now you're set back another month? Like, you can't predict what's going to happen. You're always going to run into issues. In a perfect world, everyone would have perfect guidance that's pinpoint accurate, but you just can't do that. So the fact that they're making such a big stink out of this, I don't think 5,000 per week was unrealistic at all. They did mention somehow, like he really overestimated one time with like thinking that they could make 200,000 in a year, 100 to 200,000 in a year. But that was a long time ago. So of course back then, with how good they were getting with Model S, of course it's natural to think you're going to do better with the next one, but you don't know what's going to happen. And then when they started making Model 3s, you know, you run into issues, and that's just life. So I think this is being blown way out of proportion. If the stock does go down because of this, I'll be the first to buy more, and I just think it's stupid, and I think no one should pay attention to this. They should just focus on the deliveries and the fact that everyone loves their Tesla car. So we're going to leave it at that. Hope you guys have a great night, and if you like this video, please hit that like button and subscribe if you haven't already, and share with your friends if they're getting into investing and want to kind of see how it is trading options. You can see how my daily swings are. They're pretty crazy, so maybe that'll, you know, convince some of you guys not to go really all into it because it is very risky. But I appreciate you guys so much for watching, and it means a lot to me. So I hope you guys have a great weekend, and we will see you in the next video.